Welcome to the Invest with Dennis channel, guys. Today I'm going to do a quick analysis based upon an article I saw on CNBC. It's about the U.S. economy. According to the article, the U.S. economy slowed to 1.5% growth rate in Q2. June core inflation at 3.3%. Key points: gross domestic product rose just a 1.5% rate in the first quarter, but underlying economic drives looked solid outside of a drop in inventories and government spending. Inflation readings, as judged by the Federal Reserve preferred gauge, were mostly in line, but still well above the central bank's 2% target. Consumer spending continued to climb, but the savings rate hit a 4-year low. Economic growth was weaker than expected in the second quarter, though underlying drivers were mostly solid. At the same time, inflation in June held above the Federal Reserve goal and complicated the central bank's policy path, the Commerce Department reported Thursday. Gross domestic product, a broad measure of goods and services, increased just 1.5% for the April through June period. According to the Bureau of Economic Analysis, numbers adjusted for seasonality and inflation. Economists surveyed by Dow Jones had been looking for a growth rate of 1.8%. following the 2.1% increase in the first quarter. A separate report that the Personal Consumption Expenditures Price Index, which is the Federal Reserve primary focusing gauge, fell a seasonally adjusted 0.1 at 3.7%. The readings, excluding food and energy, core PEC posted a monthly increase of 0.01% and an annual level of 3.3% against respective forecasts of 0.2 and 3.3%. While the Fed technically uses the headline PCE number as its gauge for setting policy, most officials consider core inflation as a better indicator of the long-run trends. Stock market futures were positive following the report, while Treasury yields were sharply higher. The report comes a day after a divided Fed voted 9-3 to hold its benchmark borrowing rate in a range between 3.5% to 3.75%, where it has been all year. Inflation has taken the primary focus of Fed policy makers as labor indicators have stabilized this year, with the 3 dissenting votes coming from regional presidents who have expressed concern about higher prices and the failure to make progress towards prices side of the central's mandate. GDP better than the headline. While the GDP numbers were below expectations, the miss appeared to come from a decline in federal government spending and inventories. Other parts of the economy appeared strong. Key areas of the economy continued to show improvement. Personal spending rose 2.1% after eking out a 0.4 gain in the first quarter, while a key indicator of underlying demand, called final sales to provide domestic purchasers, posted a robust 3.9% increase. However, inventories fell to 0.7% and federal spending was off 0.3%, subtracting from the top line reading. Inflation about but still high. So the inflation numbers were still higher than expected. On the inflation readings, the figures were close to expected, though still well above the Fed's 2% target. So that's the target for the Feds when it comes to inflation. Inflation's numbers have been easing heading into 2026, but accelerated after the US and Israel attacked Iran in late February, setting off a surge in energy prices that the Fed officials worry will bleed over into the broader market. Energy goods and services prices tumbled by 5.9% in June, helped by a temporary ease in the Middle East fighting that sent gasoline down 9.2%. Housing inflation also moderated, rising just 0.2%. Goods prices were overall declined by 0.6%, while services increased just 0.1%. On a quarterly basis, the PCE index surged 5.1% on headline and 3.4% for core. Spending held up for the month while personal expenditures rise 0.3% in line with expectations. Personal income was up 0.2%, which was below the estimated 0.3%. However, customers dipped into their savings to make up ends meet. Their personal savings rate declined to 2.7%, the lowest in 4 years. So this shows you that a lot of people are using savings just to spend more on goods and services, and a decline in personal savings of 2.7%, the lowest it's been in the past 4 years. So people are not saving as much because of inflation. They have to use more of their savings just to buy groceries or pay for utilities or just daily expenses that come with the territory. Overall, guys, my analysis for this is a very, very good article by CNBC. It hits right to the core. You can take a look at it. I know I gauged through it pretty fast, but it shows you a lot of people are still worried about inflation, and hopefully inflation can decline. And that also shows you why the Iran conflict is very critical, not just for the United States, but worldwide. That's why when you're investing, you need to know what is going on around you. You need to listen to the news. You need to be aware of your surroundings to see as to why goods are going up or why goods are going down. It's a great way to know why certain stocks are doing well, why certain stocks are not doing well. So guys, this was Invest by Dennis channel. This is a quick analysis from an article on CNBC about the US economy. Hopefully the economy gets better, because as the US economy gets better, the rest of the world rebounds off that. They feed off a great America, or should I say a great American economy. Please feel free to like and subscribe. Let's share the word. Let's build wealth together. Let's advise each other. Peace and blessings to everyone, guys. If you love more analysis like this, follow us on YouTube. We're on Instagram. Blessings. Ciao.